Ladies and gentlemen, good day and welcome to the Creative Newtech Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ketan Patel. Thank you, and over to you, sir.
Good morning, everyone. Welcome to Creative Newtech Limited earnings conference call for the first quarter ended June 30, 2022. Our company, as you all would know, was formerly known as Creative Peripherals and Distributions Limited. I would like to start by thanking all of you for taking the time to join. On the call with me today is Mr. Abhijit Kanvinde, our CFO, and Mr. Vijay Advani, our whole-time director. Starting with some key developments over the quarter. Before we get into the business and financial performance of the quarter, I would like to share brief insights and recent developments regarding the company. On recent developments, although the pandemic is behind us, the consumer sentiments are dipping over to the hazy views of the economy amid persistent inflation. While most of the world is gradually recovering from the pandemic, as recent as this week, we have seen that China has shut down a district of 1 million people over 4 asymptomatic COVID cases. The chip shortage is easing now, but the logistics issue and container shortage yet have to see some improvements. The unprecedented demand combined with supply chain shocks and pandemic shutdown caused critical shortages of chips, forcing companies to redesign or re-engineer products and hold components. And to add to this, for the last few weeks, the Indian rupee has been on a downward spiral and continues to show weakness against the US dollar. Although the depreciation of the Indian currency impacts imports by making them costlier, but it is also likely to enhance export competitiveness, which would impact the economy positively. Our business and our vision far exceeds beyond just distribution. Today, we are established as brand licensing with a long-term agreement with Honeywell and are building further on this line of business. This is also garnering attention of our other global brands which are looking at brand licensing as a beneficial approach. On the distribution front, we recently rearranged our segmental structure to better align with our business structure and strategy. Our brands are now categorized into the following 4 segments. Fast-moving social media gadgets, FMSG. This comprises new and niche products that appeal to the younger demographic and have a sound and a fast turnaround. The brands are driven by social media penetration and wide adoption. This is one of the fastest growing and higher margin segments. Fast-moving consumer technology, FMCG. This segment includes established and fast-moving consumer products that cater to personal as well as organizational demands such as Samsung, iBall, and Usami. Enterprise business. This comprises of products which are supplied to enterprise and are of high volume. Some brands in this category include MSI, Printronix, and Philips, AOC, etc. Fast-moving social media goods, FMEG. It's fast-moving electronics goods, FMEG. This segment covers our alliance with Reliance, through which we offer home appliances, bulbs, and lights from brands such as BPL. This segment now better represents our brand portfolios and give better clarity on high margin and high volume products. We expand and refresh our portfolio periodically with new niche products and brands which are relevant to our times. Some of our most recent brand additions include Insta360, Fujifilm, Instax, and Hyperice, a US-based company specializing in technology-based muscle recovery and massage products well known in wellness and fitness category. In Q1 FY23, we continue to work towards collaborating with well-established global brands to add to our portfolio. One such brand that we added for the quarter was Lexar. Lexar is a global brand providing memory solutions for last 25 years. These products offers including memory cards, USB flash drive readers, and SSD. Now we have the distribution rights for Lexar product range of memory and storage solutions in India. We have also expanded the category in Samsung brand by adding their Samsung flash memory products into our existing arrangement with them. Our association with both of them will help us to cater to a younger demographic driven by social media, which on a broader prospect is a high growth market segment. We are in the process of evaluating more brands to add to our portfolio during the year, which help us to achieve higher growth through higher margin products and quick working capital cycle. Our license agreement with Honeywell continue to grow stronger. We are pleased to announce that we have expanded the geographic outreach to 38 countries for Honeywell. We are constantly working to increase our footprint in this region. This gives us an opportunity to further increase our scope in terms of geographies and our licenses business overall. We will work towards scaling up this line of business in this fiscal year too. Given that we are at present across multiple channels, it gives us strong leverage to reach a wide market base. The synergy from Honeywell business will continue to grow in this fiscal year. Coming to C-Cart, C-Cart is our online business B2B e-commerce digital platform that will aid in the growth of our business while catering to the existing customers as well as the new customers with nominal additional costs. It hosts our customer in the supply chain and enables them to transact and share the product with their buyers as well. This allows the user to share their own inventory and transact among each other. It aids higher volume and expands the product portfolio being offered through Creative Newtech. C-Cart will continue to be our one-stop solution for customers as well as improve the working capital cycle and profitability. I now hand it over to Mr. Abhijit Kanminde, who will take you through the financial highlights of Q1.
Thank you and good morning to you all. I will share the highlights of our consolidated financial performance, after which we will be glad to respond to your queries. Our financials are reported as per Ind AS guidelines. In the quarter ended 30th of June 2022, the company reported a total income of rupees 244.03 crores, growing 79.59% year-on-year. This was partly since the last year's corresponding period was impacted by COVID-induced slowdown. Growth was also supported by enterprise business and fast-moving consumer technology segments and demand for the products like Samsung, Cooler Master, Honeywell, and PLY, amongst others. EBITDA stood at rupees 7.66 crores as against rupees 4.11 crores in the previous corresponding period, increasing 86.21% year-on-year. Benefit from changed product mix was offset by higher sales promotion expenses and freight and clearing charges leading to a contraction in EBITDA margin. The net profit for this quarter is rupees 4.03 crores as compared to rupees 1.23 crores in the Q1 FY21, a year-on-year growth of 227.64%. This is all from our side, and now we open the floor for questions.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Suraj Navandar from Sampada Investments. Please go ahead.
Hello, sir. Good morning. How are you?
Good morning, Surajji. Very well.
Good morning.
Sir, my first question was that for this is now second or probably third quarter that we have been impacted by higher sales and promotion. For which brand we are undertaking this activity and how long is expected to continue?
Actually, the sales promotion expenses are for various brands. Okay, and this time since the launch of Honeywell products, we had sound which was launched and in the last quarter of last financial year, the entire range of sound products whose sales promotion expenses have come in this quarter. In the sense, there was a continuous program of sales. So it was mostly about Honeywell products. Okay, the sales promotion expenses, and now we think that and it will taper down because it is an initial phase. You have higher expenses. After that, it tapers down.
Right. So can you quantify the amount of for the sales and promotion? How much we spent in the Q1?
Approximately 1.5 crores was additional to the run rate of around 50 lakhs.
Okay. Sir, we have guided for around 200 crores of revenue for this year, and we have done around 244 crores in this quarter. So that means we have to do at least 320 crores for next 3 quarters. So is it achievable then?
Yeah. So our business is kind of cyclic. The first quarter is a very subdued quarter. The quarter 2 and quarter 3 is where you really build up because all the festivals and everything starts coming in the quarter 3. And that's why in the quarter 2 month of September, the stocking level also from the retailers and the e-commerce guys goes up. So this looks very much achievable looking at how it is going. It should be. There would not be a problem.
Okay. And also on the margins and also on the profit side, we had set some targets internally. So we are on track to achieve that, right?
Yes, as of now, we are quite on track that we've achieved that.
Okay. So what was the Honeywell business in this quarter?
Okay. So the Honeywell business in this quarter was close to 15.5 crores.
16.5.
15.5.
15.5, sir.
Okay, 15.5 crores. Okay. And sir, what is the debt on our balance sheet as of end of this quarter?
Approximately, just tell you in a second. The long-term debt is around 11 crores and the short-term debt is 58 crores. So overall debt is 69 crores. So the debt equity ratio is 0.88.
Okay. And sir, can you give bifurcation of the other income, the drawback that we receive?
Yeah. In other income, the major income is the operational income. Okay. Of the incentives of duty script MEIS, that is around 4.37 crores. This is out of 5.32 crores for the quarter other income. 4.37 crores is the duty script credit MEIS. That's an incentive you get from the government, and actually it should have been treated as part of the cost of goods sold, and I should have credited COGS technically, and gross margin should have been higher. But due to it's an incentive which comes from the government, as far as the Indian accounting standard, it has to be shown as other income. Okay, so from coming quarter it will be classifying it as an other operational income, so that there is more clarity on this point.
Yes, sir, absolutely. And sir, my last question is, what would, according to you, would be 1 or 2 risks to our targets that we may not achieve it?
Okay, so kind of couple of risks are there. One was dollar, right? And we are completely hedged against the dollar, so we don't have that risk. But as the dollar pricing keeps going higher, the cost of the material also keeps going higher, not just in India, but all the other countries also. So then if affordability becomes a problem, and if we have constraint on the consumer buying, so that could be one of the risks. If the dollar hovers around 80, 82 also, we will not have a problem, because ours are mostly peripheral products, so there would not be significant dip into that. That's the first part. Second part of it is the continued China embargo, because most of our factories are in that region, which are audited by Honeywell, right? And we have not been able to visit any of these factories for the last almost now 24 to 28 months. And so the product development cycle and to look at the newer product thing, and then because they are under the embargo, the supply chain takes it. So the quarter on quarter gets hampered because sometimes you can't get ships for 14 days, 15 days. So to summarize, the dollar impact is one risk. The supply chain constraints and the logistics is the second risk. These are all the external factors. On the internal factors, because the country is now, so we have gone to SIA now as we had planned, and we had told that we will go to Southeast Asia in September. So internally, if we can't get the right skill sets to head SIA, if we can't get the right skill set to expand Middle East, and as we know now we have Africa also, they added 8 other countries of Africa. So if we don't have the right skill set internally to head Africa, then it would slow down our sales. That's kind of internal and external.
That is true.
So are you planning to hire anyone just to look after, let's say, Honeywell business? Because it is spread across multiple geographies and there are multiple regulations relating to each geography. There are different business dynamics of each geography. So are we planning to hire someone just to look after Honeywell business? Good
question, Surajji. So when we took the Honeywell business, we understood very well that the skill set is very important. So we hired at that point of time as a co-founder Mr. Mohit Anand, who was country manager for Microsoft Hardware and Xbox in India. And then he also was Asia Pacific director for a brand called Belkin from US. So with Mohit's addition on the product development, on the specification, on the marketing side, we have a good bench strength and we don't have a problem. Even on the certification side, we have a good team who can get us various certification, because now Honeywell is almost a 4-year-old business, right, with us. And besides Mohit, now as we go to other territories, we would require to hire, even for Honeywell and even for creative, say for example, on the long term, we want to kind of grow every year at this rate. After say 5,000 crores, some point of time, or say 3,000 crores, we would have to look at somebody who can then take it to the next level. So we keep speaking to a lot of guys, but then the cultural fit also has to be important, and our mindset is also kind of quite frugal, right? So we can't take any business saying that it would be a loss on the balance sheet. So if somebody is with our right mindset, who can fit into the culture. So we are actively looking at it, and I will be very honest, for SIA we have been looking for the last 3 months. Actually our internal plan was that the person should be on rolls by July, but we have not been able to do that.
Mm-hmm. So, are we not getting a right person, or what is the hindrance behind not getting the right person?
Because we are looking at somebody who would head the region, so you want somebody of Indian origin if you can get, so who knows the Indian way of working business, but also should have relationship with the retailers and this. And across Asia, for example, when you go to Singapore, it is not about Amazon, right? Lazada and Shopee are the largest retailers there. So then you would need somebody who knows Lazada and Shopee. And Lazada and Shopee are not existent in India. So from India you cannot buy somebody. So you need somebody who is residing in Singapore with Indian origins, with the connection for the business there. So we are trying to find out actively. We have spoken to headhunters. We have gone back to the peers. Mohit has gone back to his peers in Microsoft, in Belkin, to find people, but it's still taking time.
Okay. And so my last question is, Honeywell business also cyclical, because we have given target for around 150 to 200 crores for this year, and we have done 15 crores in Q1.
Yes.
Is that business also cyclical, or
Honeywell business is a bit of cyclical because the air purifier business which is there, that is completely cyclical. So the business only starts end of September in northern part of India. Similarly, in Indonesia, the similar is the case. When they burn the rice ban, that's when Singapore also air quality gets poorer and they take that. The speaker as a whole is we are just the new entrant, so cyclical business will not affect and we will grow from there. And the accessory business also is not cyclical, but it depends upon the availability of the product. So when the last quarter, especially Apple laptops and others were shortage, so our business gets a bit affected. But besides, the air purifier is not very cyclical.
All right. Thank you, sir, and all the best.
Thank you so much, Suraj. Thank you.
Thank you, sir.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Riya Kumar from SKS Capital. Please go ahead.
Hi, sir. I wanted to know, what is the rupee depreciation, impact on the business? How it is impacting our business?
So kind of a 2 to 3% slide overall transfer that almost 12 to 15% in the rise in the end user pricing. So that's one part of the thing. And second is when there is a lot of confusion about the pricing, the consumer kind of abstains for buying because if there is no clarity whether the price will go back lower or not, that's the case. So in our cases, currently around 10 to 12% is the cost increase in products.
Thank you so much, sir. And one more last question. We have seen that we have got a lot of products from China and there have been a lot of shutdowns there. So how this is impacting our business basically?
So a couple of things are there. For the copper cables and that we have factories in India which are made by Honeywell. So there we don't have a problem. In case of China, the factories really work there very well. But if supposing there are some cases in the container yard, that's when they kind of lock down the container yard and the chances of your missing the ships are there. But the overall impact is that because China has been into lockdown, instead of say 2 months inventory, now we have to have at least 3.5 months inventory because you don't know when the situation will get worse. And second is factories before were taking 30 days to produce goods are now taking almost 48, 49 days to produce goods. So overall, your working capital cycle has gone up by close to
5 days.
Overall 45 days, right?
No, earlier it was 45, now it is 50.
So overall it is 5 days, but for Honeywell business it is almost 35 to 40 days. So your working capital goes up by a month or so.
Thank you so much, sir, and all the best for the coming quarters.
Yeah, thank you so much.
Thank you.
Thank you. We have the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Am I audible, sir?
Yeah, very audible.
Yes, sir. I just want to know what is the business from Cooler Master in Q1 as compared to Q4 of FY22, if you could give me some number.
Okay. So this quarter Cooler Master was 11.03 crores as compared to the last quarter it was 10.58 crores. Some marginal improvement in Cooler Master business. Year on year, yes, there has been an increase of 5 crores almost, 4.5 crores almost in the business.
Okay. Sorry, I have joined the call late, but if you could tell me, as we had a talk last time about recategorizing the other income as other operating income.
Yes. This I have spoken with the auditors. It will be done when we submit our half yearly, when the balance sheet is submitted. So next quarter it will be done.
Okay.
And see, they suggested that we should do when we submit a balance sheet, which is next quarter.
Okay.
And then it will be consistent,
FY22 balance sheet, I think.
No. Half yearly. September. They will reclassify this September.
Okay.
And then it will be consistently reclassified.
Okay, fair enough. Got it. Yeah, fine. That's all from me.
Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Prateek Kumar, an individual investor. Please go ahead.
Sir, can you give me a breakup of your 15 crores of sale of Honeywell between various categories this quarter?
Right now, give me a second. So, Honeywell Active.
That is a mobility product.
That is a mobility product. It is approximately 6.5 crores. Honeywell Passive, that is a networking cable, is 5.64 crores. Honeywell Air Purifiers, since the season is not started, it is hardly 50 lakhs. Okay, and around 2.5 crores of sound audio.
Got it. And sir, last year, same time in the last quarter, what was your Honeywell sales?
It was 19.5 crores.
So why is there a decline, sir?
There is seasonality. First quarter is also low for our active business. Ours is a seasonal business. If you see the entire 4 years track, the first quarter has been always slow. Ketan will elaborate more.
We also have multiple products, probably into that mobility sector and other active components, which we sell to corporates. So there was a shortage of even laptops and other peripheral devices. So due to that probably in this quarter we will see a good movement of those products also.
So Prateek, to give a rather sharp answer to your question is that we expect this quarter to be 21. Few stock did not arrive on time, and plus some laptops were not there. And actually, this is on the date of 30th July is what this report is. So some stock came in the next week. So this quarter should be well, but we fell short by say 4.5 crore of our internal target on Honeywell.
Yes, that is true.
And your journey from, let's say, 60 crores last year to 160 to 200, which category will drive it, sir?
Okay, so our hope was that, because audio as a overall global is a $25 billion market, right? So we think audio will definitely lead the sale. And if audio we can really fire well, then we should sail through very easily. But we have built in a lot of contingency on that. And right now, active or the mobility products which surround the 3 screen, right? Your laptop screen, your mobile screen, and your TV screen. That products are doing very well, and that will take us there. Second is, as we open up territories, right? So usually now when we open up a distributor, say we are in talks with a couple of distributors for Singapore, Malaysia, one for Bangladesh, their opening orders are only close to, say, $500,000 between the three distributors. So that also, because you're going to virgin market, your products where will be placed for the first time. So you get that advantage that when the material moves on the retailer shelf, that's the captive inventory which they will always keep. So that's going to help us there. And I think it would be fair to say that we would reach the 155-160 crore Honeywell target which we have in mind.
And so, sorry, my understanding is limited. You have a 52% stake in the Honeywell business, right? Eventually, after the minority interest.
Yes.
Okay. And just, from a quality of sales perspective, I'm sure you guys will be tracking it on the B2B channel, on the Amazon channel. How is your quality of sale, and within a category, what is your rank?
Okay.
Do you have?
Yeah. So a couple of things are there. Amazon, it is not just the quality of product, right? You should have the right GVs, that is glance views they call. Then you should have the right reviews, right? For every 100 products you sell, only 10 people write the reviews, right? And then to come on a higher side, you require a certain amount of reviews, you require a certain amount of glance views to do that. So that art we have now enabled, and lot of our products which are old, say like surge suppressor, C-type docking station, they are all with now 2,500, 3,000 reviews. And that reviews really help us that when we go to Middle East also, the same scenes get captured in Middle East, so the same reviews are seen there. So that's helping us on products which are almost in the system for 2, 3 years old. For products like audio, which we just launched, we have just 40, 50 reviews on that. But so in India, the C-type docking station is the number one choice for Amazon today. Our 6-port surge suppressor is also Amazon's choice today there. In Middle East, our 3 of the products, so the air purifier is number 3 in Honeywell's choice, number 1 in most recent launches, and number 1 in most desired in its category of air purifiers. That's the case. And as we go to Southeast Asia, Amazon is not the dominant player. Lazada and Shopee are the dominant players, and they have a different review mechanism. So it is a horses for courses strategy, but in India and Middle East, where Amazon is the dominant player, we have to still work a lot on getting the reviews done, because on the reviews only your sale can increase. That's the case.
Correct. And sir, sorry, I missed it. What is your best sellers rank for let's say your audio products, or are you in any of the best sellers as of now?
So no, in audio we are not on any of the best sellers. Only we corrected our supplies last 3 days, and we have seen a remarkable jump into that. Second was Amazon itself also was aligning its alpha sellers, right? So CloudTel or Apario is their alpha seller, and they disintegrated CloudTel last May. Now another 8 or 10 alpha sellers are there, which will align before the Independence Day sale and that. So once our products they start pitching in, that's when we will see some traction on our products.
Got it. And so just quickly, if I were to remove, because Honeywell is a very high margin business, if I were to remove that from the EBITDA and then see, the other part of the business, the margins over there are quite immaterial. Is that understanding correct?
Yeah, Pratik, in a way that understanding is correct. So kind of see everybody what is our business if you want to see, right? How fast we can rotate our capital, right? And so if you want to rotate your capital fast, then you require quick sell, right, products and quick inventory turn products. So that's the whole business crux is that how fast you can do your business. Second is the cost of, because there is no capital expenditure, right? You are not running any factory or anything. So your cost of business is pegged at a certain number, and post that everything what you do comes to your bottom line. So in our case currently, the other businesses which are there, which helps us to bring down cost considerably for our Honeywell business. And as a company now, every incremental resource and every incremental finance what we are getting, we are just putting it into the Honeywell business. So over a period of time, you will see that Honeywell business will keep increasing, while as even in the FMSG, the fast-moving social goods category, there's a margin of 10 to 12%. So all incremental resources are put into this newer kind of businesses. But the traditional business gets us a foot in the door, and that's why we can't drop that business. Yes, we have to be cautious that we don't increase that business a lot because it takes away a lot of our management time. But if that business needs to be there.
Got it. And can you also help me with working capital as of June? Yeah. Because as you said, your business is about inventory terms and managing working capital. Maybe that is something that will be very helpful.
So ideally, we were last year before COVID, we were at 45 days of working capital. Today we are at around 50 days. And that's because there have been supply chain issues in last financial year and this quarter also. Okay, but going forward, this year-end target, we want to bring down these days to at least in the range of 42 to 43, and then going forward below 40. That's is going to be our overall target. This quarter is low, so the ratios and all will not be very, very representative. Once you have good numbers, then the ratios would make sense. So 50 from 50, we wanted first stages to go to 45, and then go down to 42, 43, and then go down below 40 over a period of 1.5, 2 years time.
So Pratik, just to add to what Abhijit said, it's a conscious call currently, right? You have to decide whether you want to have higher inventory because the logistics is a issue currently, or you want to have a better cash flow. And currently, we have taken a call that we will have a higher inventory, and because if the finance cost can hit by 1 percentage point, but then we don't want to lose on an average 10% margin product, or in Honeywell a 40% margin product. So that's the call. But yes, last quarter we have not done a good job on working capital management.
Okay, and so just I'm not sure, you had a guidance of 2,500 crores by FY25, right?
Yes, sir.
Okay, and how much was Honeywell in it?
Sir, our endeavor is that it should be between 25 to 30%. So if we do, our guidance is of 2,000 crores, sir. But if you say at your figure also 2,500 crores, Honeywell should be around 600 to 625 crores. And because we got category expansions, right? We had only first enhancement products and mobility products. Then last November we got November 21 we got all audio, and air purifier also we got the complete new range. So with the category expansion and the geography expansion, we will see an exponential rise in Honeywell business.
Got it. And lastly, sir, just if you can help me understand your debtors and inventory cycle, in the sense how much is your debtor days, just a breakup of that working capital, that will be really helpful.
100%. Just a minute. Abhijit is
so,
right.
If you see, I said that overall working capital size of cycle of 50 days. Okay. So debtors would be in the range of 31, inventory 43, and creditors would be 24.
Okay. And when you bring this down to, let's say, whatever 40 days or below, it is the inventory which will come down. That is the driver.
And the creditor days
Creditors will go up, sir.
So creditor days usually were around 30 to 35 days. But because now, first from the factory to the dockyards, it was the 4 days and you could catch the ship in 4 days. Now minimum you have to plan between 18 and 21 days to catch the ship. That's what is kind of taking a toll on the creditors days. And inventory, because you don't want to lose out on that, that's why we are stocking, at least for Honeywell and certain gaming products, a month inventory more. That's why it is the thing.
And I heard your comment on China embargo. I was just slightly curious. Is it that you are not allowed to visit over there?
Yes. So so China as a country we can't visit. And if you want to call somebody from China to Hong Kong, then every time you go, it's a 7 day. It was a 14 days. Now it's a 7 days quarantine. So all of us have honed our skills to kind of launch products. So Honeywell Audio, kind of we launched more than 60 SKUs in the COVID period without visiting. But when you go to a factory, you see their facilities, you can talk on components, you can talk on other parts. So that whole process gets delayed, and then because it's not a face-to-face interaction, you can't kind of search for newer factories, newer design houses, because you want to first visit their facilities, be comfortable, look at the vibes they give you, and then go ahead, right? So that's the problem currently.
Is this because of COVID that they are not allowing, or is it something else, the external issues?
There was zero COVID policy. So if they get a cases of more than 4 or 5, then they lock down the whole district. That's the case.
So that is why they have stopped incoming tourists or business people, is it?
From December 20, nobody has been able to go there.
Okay.
The people from China or Hong Kong are not coming to visit us. They can come. India is open. But when they go back, they have to have a 7 days quarantine, at least in Hong Kong, for the Hong Kong citizen. So that's why they are also not visiting.
Got it, sir. This is all from my side. Thanks.
Thank you so much for
Thank you so much.
Thank you. We have the next question from the line of Mihir Dhami from Lucky Securities. Please go ahead.
Sir, thanks for the opportunity. How much sales impact would you have seen this quarter because of customers deferring their demand in hopes of price reducing in the next few quarters? Can you quantify that, and do you expect sales to improve that is why in the next few quarters?
So, Mihir, one is the price gets increased, and one is the fear that because of the price increase, the consumer will not buy, right? So, because we are a B2B company, our primary buyers are the likes of Chroma, Reliance, Amazon, and Flipkart, and there, right? The moment you talk about increasing the price, they kind of reduce the inventory. So usually a Flipkart or a Reliance would carry inventory between 6 to 8 weeks, right? So they kind of reduce their inventory, and they also do not buy a lot of inventory because they think if the price goes down, of course they get compensated, but it takes a time. So just to put an exact number would be kind of very difficult. But the price rise and the sentiments, they kind of hamper the consumer demand, and in terms, the buyers don't buy. That's okay.
Okay. Yeah. So you witness destocking currently in this quarter and next quarter. There won't.
Yeah. So two things. No, I didn't get the question. What did you say?
you witnessed destocking in this quarter on the end of Reliance and Flipkart, and in the next few quarters it won't be there?
In the next 2 quarters, because the festivities are there, right? Now you will have the Independence Day sale, right? And then the Big Billion Day sale for Flipkart and Amazon. And then Reliance will get into, and the retail will get into the festive thing, right? In Middle East, from September, October, the overall heat would start coming down, right? And that's why for us, our business is quite cyclic. So how do we look at our business for you? The quarter 1 is the lowest, quarter 2 builds up, quarter 3 is the highest. Quarter 4 then sets the stage for the next year, next first quarter, and then you develop from there. That's how we kind of plan.
Okay, that is all. Thank you.
Thank you so much.
Thank you, sir.
Thank you. We have the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Yeah. So I just wanted to know, we are facing a scenario where our biggest buyers are not sure of whether to how much stock the inventory of goods, like where the price could be a major play. Why are we front loading our inventory in our books and hurting our working capital cycle? Because or else does the management have a view in place where they foresee that the sales is going to be strong in coming quarter? Because there seems to be some gap between the understanding from the management perspective as compared to the buyers like Reliance, Flipkart, etc.
Correct. So Vignesh, basically I'll just make it simple. You are saying that if the market outlook is not so bright, why are you stocking up, right?
Right.
That's okay. So 2 things to that. Number 1 is that our inventory we stock only in a bonded warehouse in China. So we have an advantage that if the sales happen better in, say, Middle East, if the sentiments, because kind of Middle East has been in advantage right from COVID times because they were always open, and the war also got them a lot of people to migrate there. So we have for the inventory which is international, so which does not have plugs, we kind of have the inventory in Hong Kong. So if there's a chance to sell more, we are not stocked out. That's one of our view. And second of our view is that when there is a price rise for a quarter or for a 30-60 days, then the effect dies down and then the new price becomes the normal. And the third most important part for us is because we have got extended geographies. So tomorrow, for example, Southeast Asia opens up, right? So we should have inventory to supply them also. And that's why looking at our internal projection and then building a bit of caution to it, we have taken up this call.
But when on our contract side where we give it to our contract manufacturers, our price is more or less set when that contract manufacturer manufactures for us, right? So how are we mitigating any drop in price as such? Even if the product is in the bonded warehouse in China, but our contract side of the cost is committed, right?
Correct. So kind of when you look at our structured cabling business, right? So that's where one offer dictates the price. And in structured cabling, there's no technology other than the rolling of the cable, right? So there the markup is not huge. And if the copper price goes down, obviously your inventory you will have to take this. But because you are a brand and you are selling at a certain price, and overall the pricing goes down, but there's some benchmark price associated with the brand and then the consumer price. Coming to all our other products, it's predominantly the chip and the circuitry and the board and the firmware and the app which goes with it. So for a particular component to say that the price because of this component went up would be minimal overall. That's the case. And all these products, we kind of forecast 4 months in advance, and the inventory is bought. So, for example, today we are placing for the orders for the month of October, okay? And so we place the order today. The companies, the factories start procuring material, and then the price is kind of fixed on that. Only for our copper cables, we look at the aluminium, and for that we only forecast the 60 days inventory. And yes, in that 60 days, if the price goes down, we will have to kind of take that loss on the balance sheet.
Okay. Fine. And coming, yeah, go ahead.
So when you quote for any kind of a product, it is not standalone product. It goes along with some peripheral, some device, some product, some machine. So because of the supply chain issue, if there are 5 components coming from 3 vendors, there is a possibility of 1 component getting delayed. So because of that, the sale is getting pushed, the purchase buying is getting pushed. Now suppose if there is an LCL container where there is a component which is maybe contributing only 25% of the machinery cost, but you are not getting the container for almost 20 days, 25 days to LCL container to ship from there to here. One consignment which comes by air has to be loaded in 3 aircraft instead of 1 aircraft. Yeah. So these are the reasons where there are some places there are stocks, there are some places no inventory, which is mismatching the product.
It's not about the
inventory.
He's saying if the cost goes down.
Yeah. Okay. Yeah, that is the second. That was the second question. So you can complete that.
Okay. I get that this inventory part of it, right? Because I just wanted to understand that. Secondly, on Honeywell business, we have something in place where the licensing agreement, is beyond beyond India, and how, as of now, are we leveraging that advantage, or are we expanding to other boundaries?
So currently we have our distribution presence in Middle East.
As in the China issue is creating problems, as in where we are not able to expand our product line. As in.
So the China issue kind of slows down your new product introduction. That's called NPI. So the China issue on your NPI and kind of increase your working capital. That's the 2 effects it has.
Absolutely.
Coming to our geographical expansion, now because we have the whole enhancement and mobility range, we have the air purifier range, and we have the audio range as a category. We have taken all this category and we have gone to Qatar. Dotana Distributors or Ali bin Ali, that's the distribution company who is taking our products to Qatar. Jabal Al Arayan is the company in Dubai who is our new distributor for the products there. And now we will open Saudi. We are in talks with a few people there to open up Saudi. Southeast Asia also, because the certification and everything is in place. We are now in talks to open up Singapore, Malaysia, and Bangladesh. Sri Lanka and Nepal are very minuscule territories currently to look at. And both these territories would have director sales, Middle East and director sales, TIA, that is Southeast Asia, who would in turn come and report to Mohit or to me in India. So these territories would then kind of help us to increase.
So the the idea of the company is to increase the Middle East footprint, right? And we can expect more business coming from Middle East in current fiscal, right?
Correct. So Amazon, we are present on Amazon.e and we are doing quite well on Amazon.e. Now we are present on Noon, we are present in Seraph Mall. So all the hard work which we put in the last 6 months to get the product on the shelf, to get product listed, all that is done. So now the sales would start coming from this territory. And then that's our plan, right? You get a distributor, you work with them for 4 or 5 months, you stabilize them. He starts giving you forecasting and orders, then you start opening another territory and then you get a distributor there.
Okay, and in this geography as well, there would be a similar level of margins as in India, or would there be some?
In the other regions, the margin is a 10 percentage point higher because the GST is not there, and places like Singapore, the affordability is very high, right? Today in Singapore, a normal meal would cost you between, or a normal Uber ride would cost you between $18 and $20, right? And audio product average selling price would be $10, $12. So for them, the affordability is not much of an issue. If we are available at the right places, that happens. So the margin outside of India is 10 percentage point higher. Gross margin I'm talking about.
Okay, right. Yeah. And how is our after our agreement for Fujifilm Instax, how is the product performing as in Indian geography?
Yeah, so because India's millennial population, 35 years and less is more than 75%, they want something retro, they want something very nice, and Fuji is emerging as a good gifting product. Our sales currently for the last quarter for Fuji were close to 2.5 crores, and we think it will do much better in the coming festive season.
Okay. Yeah, that's all from my side. Thank you.
Thank you so much.
Thank you.
Thank you. We have the last question from the line of Suraj Navandar from Sampara Investments. Please go ahead.
Hi, sir. Sir, last time we met, you spoke about Honeywell bidding for some metro cabling. Is there any update on that?
Go ahead. I didn't get the question. You said we spoke about Honeywell what?
Honeywell bidding for cabling for the metro work that is going on in the Mumbai currently.
Yeah, so that started picking up traction. Even BSNL has approved now as the main product, and we will see a lot of. And when we go outside of India, also the Honeywell passive cabling business attracts a lot of attention. So it should start showing results. Last quarter also we did well, and I think this quarter also it would start falling in place.
And if we win any tender, all the sourcing will be done from us, right?
Yes, 100%. Because we have the exclusive licensee, and nobody other than us can manufacture that.
Okay. Thank you, sir. Thank you.
Okay.
All the best.
Thank you.
Thank you. That was the last question. I now hand it over to the management for closing comments.
I thank the entire team of Creative for their hard work and dedication which pushes the company forward. Also, I appreciate all of you for participating in this conference call. Thank you so much and have a nice weekend.
Thank you very much.
Thank you.
Thank you. On behalf of Creative Newtech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.